In this video, I'm going to do the technical analysis for S&P 500 index for the week commencing from January 17th, 2022. This technical analysis will be in two parts. First, I will do it on the weekly chart and then I will do it on the daily chart. Okay, so this way we'll be able to get the most accurate results here. So if I talk about the previous week, okay, the week that commenced from January 10th, okay, this particular candle, if you see this particular candle, okay, then I told you last week, this was a technical analysis for the previous week. So this is what I told you. But as of now, if you think that market is coming down, no, it is not coming down. But yes, on Monday or on Tuesday, you can see that it is coming down a bit, but then it is going to bounce back. Either it will bounce back from here, okay, or it will bounce back from the boundary of the Ichimoku, or it may enter Ichimoku and then it may hits this, this support again 4592, and then it will retrace, or from 4572. See, whatever happens before we see a bubble burst, okay, market will move up. Okay, so see, this is what I told you last week, that whatever happens, market is going to retrace. Market will retrace. Anyways, let's do the technical analysis here, okay, for the week of January 17, 2022. Okay, guys, so we are here on the weekly chart. This is the weekly chart. Weekly chart means one candle represents 1 week, not 1 day, not 1 hour. Okay, so let me first discuss the nature of the candle. Okay, if you see this, the last candle that was formed for the week of January 10th, okay, remember this is the weekly candle. Okay, one candle means 1 week. Then this candle, okay, number one, it is a spindle. Okay, number two, it is a hollow red candle, which is a sign of a bull movement. Whenever you see this, this red hollow candle, okay, and particularly in this the spindle form, it's a sign that market is not going to give up. Market is going to retrace and is going to follow the bull trend. Okay, so this was the interpretation of this particular candle. Now let's first do the technical analysis here on the weekly chart. So we have the Bollinger Band. If you see, this is the upper band of the Bollinger Band, okay, then median is here. Now the market is in between the upper band and the median, which means the market is bullish. Now second thing is, if you see these are moving averages, there is a clear fan out in the moving averages, which means the market is bullish. And secondly, if you see, the candle has closed above the moving averages, okay, and moving averages are in the clear fan out, okay, which means the market is clearly bullish. Third thing is that market has closed above the Ichimoku cloud, okay, not in the Ichimoku cloud but above the Ichimoku cloud, which means the market is bullish. So through all of these 3 or 4 indicators, okay, market is bullish. Now let's see what is happening there in stock RSI, MACD and other technical indicators. Now if you see, okay, MACD is clearly bearish because MACD is 108 and the signal is 117. If you see the stock RSI is again bearish because the K channel is 24 and the D channel is 35. Both MACD and stock RSI are bearish. But the interesting thing is that MACD is not heavily bearish. Okay, it is just marginally bearish. Okay, so this marginally bearish, okay, which means that yes, the market still has potential to retrace. Okay, now comes the divergence. So the divergence is 60. Okay, as of now it's not a problem, but when it reaches to like 70, okay, 69, 70, 71, then for sure, then it will create a problem. Then comes the momentum. Okay, momentum is not enough. Okay, means see, in simple terms, momentum is only 18.60, which means it is not supporting, okay, neither bulls nor bears. So if you see that the indicators here, okay, moving averages, Bollinger bands, formation of the candle, means the nature of the candle, Bollinger band, okay, then the Ichimoku, they are saying the market is bullish. and the MACD and the stock RSI are saying market is bearish. Okay, which means the trend is not clear here, but yes, partially it is, see, it is partially clear, because see, if we uh, okay, let me tell you, okay, this thing this way, that whenever a candle is formed, whenever there is some kind of certainty, some kind of certainty from the candle itself, okay, then the technical indicators will not affect the movement of the market. Okay, and this kind of candles, okay, this kind of candle that is formed for the week of January 10th. The same candle was formed in the month of March, second week or third week, okay, 2020, when everything was coming down. When this candle was formed, then that mayhem, okay, it stopped, and then market retraced. So whenever the nature of the candle is known, then it will override the technical indicators. Okay, and here this is the nature of the candle. It is a red hollow candle here formed in a spindle form, which means there are 99% chances it is going to retrace. Market is bullish. Okay, so now we'll see means how the technical indicators are performing on the daily chart. Okay, then the trend will be more clear there. So let's move on to the daily chart. Okay guys, so we are here on the daily chart. This is the daily chart. Daily chart means, let me write it down. This is the daily chart. Daily chart means one candle represents one day. One candle means one day. Okay. So now that we are done with the technical analysis on the weekly chart, so when we do this, the technical analysis on the daily chart, okay, then the picture will be more clear. Like what is, okay, so we are here on the chart. Okay, the technical analysis, and this is the daily chart. First, let me write down the support and resistances, okay, as we always do. We have this resistance at 4830, 4830. One more thing, guys, there is no change in the support and resistances. Okay, support and resistances are the same as they are for last many months. Okay. Then comes the next resistance. It is 4790, 4790. Then we have 4740. So I have told you the importance of 4740 many times in my previous technical analysis. 4740, and you can see the importance of 4740 here, here, and sorry, okay, here also. So I've told you the importance of this, the technical analysis, many times. Okay. Then comes the immediate resistance for the market, which is at 4690. It is 4690. Okay. Then comes the immediate support at 4632 or 4635. 463, so 4635. Then comes another support at 4592 or 4590. 4590. Then another one at 4572 or 4575. 4575. Currently it is at 4660. Okay. Then finally here it is 4527. 4527. Okay. And one more thing, remember that I've told you many times earlier also, that my support and resistances, okay, are very very sensitive. Whenever market hits my support and resistances, then something happens in the market. Okay, like this one. One more resistance here, 4860. 4860. Okay, so a lot of support and resistances here. Anyways, so let's first do the technical analysis here. We have the lower band of the Bollinger Band. We have the median. Market has closed between the lower band of the Bollinger Band and the median, which means the market is bearish. Then comes the moving averages. As of now, there is no crossover as such, okay, and pan out only in three moving averages, okay. Means through moving averages, it is not clear whether it is bullish or bearish. It's not clear. But if you see that because market has closed two consecutive times, okay, below the moving averages, which means market is bearish, okay. But as such, but still through the pattern of the moving averages, market is bearish, and the same thing that I told you last week also, okay. Pattern says the pattern says that the market is bullish, okay, but because the market has closed two consecutive times, okay, below the moving average, it is bearish. Now Ichimoku, because the market has closed above the Ichimoku in the bull direction, which means the market is bullish. Bollinger Band is bearish, Ichimoku is bullish, moving averages are means we are not sure like whether it is bullish or bearish. So let's see what other technical indicators are saying here. Okay, fine. So we have MACD. MACD is saying bearish. So MACD is clearly bearish. Then we have the stock RSI. Stock RSI is bearish. Okay. Then we have the divergence. So divergence is normal, not a problem. Then we have the momentum. So momentum is normal. Okay. It is just 34. Not it is neither supporting bulls nor supporting the bears. Okay. See, generally we use the MACD for divergence. So MACD as such will not give you the direction that it is coming down. Okay, but this is the general interpretation of the MACD. But we use the MACD specifically to see the divergence in the market. Okay, means how much there is a divergence between the price, okay, and the moving averages, okay, and other factors. So we look into the divergence, okay. So we will talk about this thing some other day. Anyways, through all of these the technical indicators, okay, it is pretty much clear that the market is bearish, okay. But the Ichimoku is saying market is bullish, and partially the moving averages are saying market is bullish. And through the nature on the weekly chart, the nature of the candle on the weekly chart, okay, it is clear that the market is bullish. Now, okay, now let's see how the market is going to react or behave in the coming week. See, two consecutive times market was able to save itself from coming into the Ichimoku, okay, which means that market is still bullish. Now on Monday or on Tuesday, okay, you may see that market is again coming a bit, okay, and is hitting this particular support or maybe boundary of the Ichimoku, or is entering into the Ichimoku, and then these support and resistances, okay. So but market will not be bearish, okay, until and unless you see across this, until and unless you see that market has crossed the Ichimoku. So when market crosses Ichimoku in the bear zone, in the bear direction, then only we will say market is bearish, but otherwise market is not bearish, okay. So as such, what is expected to happen here is that again you can expect a rebound in the market, okay, that there will be a rebound in the market, a retrace in the market, because these two candles, this one and this one, these two candles that were formed here, the reason was the data, the statistics, okay, the news from the Feds, okay, and on the economy, and on these other things. But the movement of the market, if you see, it was clearly bullish, okay, which means that market is still bullish. Market is still bullish. See, my advice is just wait and watch, okay, and this is the direction that we are seeing here. So this particular is through the technical analysis, okay. This the bearish market is bearish through technical analysis, but the formation of candle itself is saying, and the movement of market, and that because the S&P 500 is in bubble, okay, and in order to bubble the and in order to see a bubble burst, okay, first the market has to move up, and when it moves up, then only it will fall. Okay, so you should wait for the market to see. So this was bearish direction through technical analysis, and this bullish direction, okay, through all other factors here. So guys, I have given the link to my Discord spreadsheet, Google spreadsheet, in the description of the video, so you can take a look. And also, and also there is a program. This is the options trading profit strategies program. Okay, so if you want to join that program to learn the options trading strategy, so you are welcome. So guys, this was my technical analysis for S&P 500 index for the week commencing from January 17th, 2022.